In this video, traders, we're going to look at how to find a trading strategy that works. Stay tuned. Hey traders, welcome to you. Thank you for joining me. All right, so this is a question on one of the comments on my video, and it's from day trader Fidel. He said, awesome video. Do you have a video on how to find a strategy? What's the process in finding a strategy? Do I just trade a bunch of strategies and journal for a month and see which one worked for me? Great question. And this is something that a lot of new traders I kind of struggle with, and it makes sense because there's so much out there. Like, which do I use? I don't want to lose money, this and that and the other. One thing to kind of consider, and I appreciate your question, by the way, all the questions that are coming in, keep them coming. If it's something that we can answer straight away, I'll do it. If I can help you guys, I will. You know that if I can't, then I'll try to help you and point you in somewhere that can help you out. So, how to find a trading strategy. And this is interesting because I recently polled the people who are members of the mastermind group, and there's a small section of newer traders, a little bit more experienced, perhaps a year plus. But the newer traders, the most common thing is trying to find a strategy. It's like, okay, I can't find a strategy. The ones who have been in the game kind of 5 year plus tend to be looking to increase position size because they've got things dialed in. It's their challenge of trying to get more from the market they're doing okay with. So this is the right thing to think about. And the fact that you're thinking, okay, how can I find a strategy, rather than kind of going backwards and forwards for every single strategy, is helping. So one thing I want to say, you guys, is that nothing works all the time. And when I say works, you've got to be careful how you define success in a strategy. So let's look at two different extremes, for example, both profitable strategies. One is a black swan hedge fund. And these guys will literally buy well out of the money put options. In other words, they're going to get paid out if something extreme happens. And this is a failing strategy if you looked at it over a year, maybe a 2 year period. Loss, 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 loss. All of a sudden, bang, they make a huge windfall, make 1,000%, and it makes up for the 5 years where they've made nothing. That's a really extreme strategy. Go to the other side of the coin. Again, using options as an example, selling options that are way out of the money. So literally taking the other side of that strategy. Okay, so if you're selling them, the other side of that deal, you're making money, making money, making money, making money, making money, making money, and then every so often you're going to get smacked. Just like the insurance business. Take premiums, take premiums, take premiums, take premiums. All of a sudden, there's a fire, you got to pay out. So there's two extremes of trading strategies. Now, you might look at them in a kind of small window and go, wow, that one's really profitable. Wow, that one's awful. But you've got to look at over a bigger time frame. And I get, we are not in the business, most of us aren't in the business of sitting with a strategy for years and then hoping for a windfall. That's not where we are. We're sitting somewhere in the middle of that and saying, okay, maybe I can put up with a 60% win rate, a 40% win rate, as long as over the month or the quarter, it's not too bad and I end up with some profit in my pocket, or even the year. Some people are prepared to sit through a year, or maybe it's a week if you're a day trader. So you've got to be careful what lens you're looking at the strategy through, and not automatically defaulting to a strategy with a high win rate, because that's a common problem I think with newer traders. And guys, you know, it's natural. When we start trading, we want to have a high win rate. We feel like that's a good success barometer, but it's actually not. At the same time, we don't want a really low win rate because that dents confidence, and even if you think you can stomach it, you've got to kind of sit through it. There's lots of challenges with that, so discard that. So want somewhere in the middle. Okay, so now we're trying to look at a strategy that's actually got a reasonable win rate, let's say 50-50, the worst we're looking for, and has got a good risk-reward ratio, and this, all this kind of stuff. Now, you know, there's plenty of strategies out there. We'll look at, they don't have to kind of invest in a premium course to see strategies. There's some, you know, plenty of good strategies out there. But if you do, one of the things I talk about is balancing the risk-reward ratio with the probability of success. And there's I've got like a table in there, and we talk about that in some of the earlier modules of getting that clear in your mind. And that's something to look for. So something that has a good risk-reward ratio. Personally, I like to take trades with a good high risk-reward ratio. I'm risking $1 to make 3, or risking $1 to make 5. Even then, if I've got a 50% win rate, I know that it's good. And I feel comfortable taking those time and time and time and time again. So nothing works all the time. Let's go back to this point. Nothing works all the time. Something that works under one condition is going to be the worst strategy ever. So you're never going to get this holy grail of a machine that kind of sits there and works. So the way to do it, and the way that I like to do it, is to go, okay, what are the current conditions? It's super simple, by the way. What are the current conditions? The current conditions are a trending environment. Let's use a perfect example now. US tech. US tech stocks have a relentless bid behind them. Right now they do. Right now, that is the environment for US tech. That's also the environment if you're trading in gold. Not so much if you're trading, let's say, retail stocks. Retail stocks are range bound. So you look at the current environment, then you go, right, what would have worked if I traded a strategy in this current environment? This is all we can do as traders, guys. And what would have worked in this relentless bid in tech is to be buying some kind of dip in any stock that's got a good uptrend. What would have worked in a range bound environment for the retail stocks would be fading highs and lows. What would have worked trading currency pairs after the coronavirus up until now, we've started to get some dollar movement, would have been selling high and buying lows in a range bound environment. So we go, right, now we know the conditions we're in. Now, bear in mind, guys, this may sound simple, and I'm sure we get a barrage of comments that say, well, that's oversimplifying it, we could change at any point. Yes, we can, but this is the difference, guys. This is the difference between thinking ahead and overthinking things and going, you know what, we have an uptrend, we are moving higher, I'm going to keep buying dips until the market does not move any higher, until we kind of stagnate in a range for a couple of months, or we do this, or we break out of a range. I'm going to keep selling that range until we break out. It's just sticking with it, because often we'll stay in the same conditions for a long period of time. If you don't like those conditions, then wait for the conditions to change. If you don't like trading range bound environment, wait until we break out and then go, okay, I'm going to trade momentum ignition type trade. So simply put, look at current conditions on the markets you like to trade. What is it doing? Is it a big kind of multi-year range? Are we at fresh highs? And then just say, okay, well, what would have worked? And then you go back and you go, right, now I can find a strategy that works in a trending environment. Let me just use a trending strategy. Let me not try to be clever. Let me filter trades to align myself with the trend. There's another little trick, guys, which makes a massive difference. If the market is in a severe uptrend, just stop trying to short it. Just say, listen, there's plenty of opportunity to wait for the down moves to get long. Yes, technically, if you're selling extensions and mean reversion, fine, but that's something that can come later and more advanced. Just align yourself with the trend and say, hey, I'm going to wait in this uptrend until the market comes down to my level and I'm going to buy it. Unless it's oversimplifying things, but then we come to the point of, okay, how do I quantify my risk? How do I find trades that express the idea that we're going to continue in the trend, or we're going to continue in the range bound environment with the least amount of risk possible? This is where the intuition, this is where the experience and sweet spot comes in. So I have filters and triggers, and it works fantastically well. I have a filtering process which brings the trades into my alert system, if you like, or into my ecosystem, and then I have a trigger which gets me into the trade. So guys, there's loads of free material. We'll talk about some of the candlestick entries on the channel. We'll talk about, other bits and pieces that you can use as triggers. Very, very simply, you can say, right, okay, I'm only going to go long. I'm in an uptrend, eyeball. I'm going to wait until we've hit the 20 period moving average on a daily. There's your filter. Then I'm going to enter when we have a break of the prior low and then a push back up, or 2-day move, or we have a tail on a candle, or we have a tail on a candle and then a good bid, or we have a bullish engulfing. Any of these kind of standardized things, it's like fitting them together like a jigsaw. And now we've got a simple strategy. We've just come up with a simple strategy. And if you're in the right environment, you can trade that, and you can say, right, when I get bullish engulfing, I'm going to buy at the close, I'm going to stop under the last low, and I'm going to look for a move to new highs. Most of the time, that's probably going to give me a 3-to-1. I'm going to take that until I see the market trade sideways for a week or something. Now, you may be unlucky. You may take that trade. Programs, I've said, hey, this is working really, really well for me. This is sharing the exact strategy, still working at this moment in time. But one of the caveats is, I don't know when it's going to stop working. We've got processes in place to pull back money and capital at risk when we do feel it's not working. But while it's working, we're going to press it, and we're not going to do anything clever. We're not going to try to outthink or overthink things. And so, going back to the initial point of, okay, let me put these pieces of jigsaw puzzle together. Once they're together, then just trade it. Just trade it and see how it goes. And don't try to fine tune things. If the market is going higher, then just keep buying dips until that stops. But try to refine the entry so you can take the least amount of risk possible to get the reward. That's where the kind of sweet spot is for really maximizing your gains. And also understand, guys, that the strategy is a guide, not a black box. And so, if you have a range bound market, talk about a bull market, if you have a range bound market and you think that, hey, when we hit highs, and that's a strategy of saying, okay, when we are up at a resistance level and we kind of broken through, I'm going to fade it for a move back. It's a theme to use for the conditions. It's not a black box entry of saying I'm always going to take this, because the more we try to make it into a black box, I think the harder it becomes. So a guide, a theme. And by the way, guys, you know, I talk about this strategy. There's so many books as well that have got strategies in. You know, you can go onto Amazon and, you know, we've got opening range breakout strategy. I've done a video on that before. There's so many books that talk about, you know, different strategies. If you want to use indicators, how to use a stochastic, how to use an RSI. All of these will work under the right conditions. It's just your job as a trader is to go, what are the conditions? Is there any reason for me to think these conditions would change in the future? No, then why don't I just stick to that trading strategy and run it until the conditions stop? It sounds like I'm oversimplifying it, guys, but honestly, throughout my career, when I've just done that, that's when I've, you know, had the biggest years. When I've just gone, you know, this is working, I'm going to keep pressing it while it's working. I'm not going to try and overthink things. This strategy is working. Let's keep going at it, and it will serve you in good stead moving forward. So, using strategy as a guide, not a black box. Final thing, guys, free and premium resources. Just talked about those. Loads of books out there that are relatively cheap. Loads of stuff on the internet with strategies as well, ideas and ways that you can tweak and adjust for yourself. Premium resources, a problem with buying premium stuff and investing and things like that. If you want to, you don't need to. Like I said, there's loads of free stuff as well that you can make and tweak and adjust to suit you. Anyway, I appreciate the question. This is a longer video than perhaps you anticipated. But this is the kind of thing that I know is so key to new traders. And I think the summary, guys, is try not to overcomplicate things. Just look at what the conditions are. Just think what would have worked, and then just all we can do is assume that conditions may well stay as they are in the future. As you get more experience, you can find the clues that mean that things are going to change, and that just comes with experience. But once you've got that, trade it and see how you get on. And back to the initial question very quickly of having enough iterations of the strategy, enough occurrences. Yes, don't change strategies after 2 or 3 trades. Trade it for a while, take notes, take a journal, go back, review, see what could be tweaked, see what could be adjusted. How can I improve my entry? How can I improve my exit? Where can I do better? Where do I do bad at it? What about the discipline aspect of it? And do it like that, rather than just taking 1 or 2 trades, go, it's not working, discarding it, looking for the next one, looking for the next one, looking for the next one. Anyway, appreciate your comments, questions, all that kind of stuff. See you next one. Take care, guys. Bye-bye.